Hello everyone, welcome back to my YouTube channel Sachin Education Hub. Friends, today we are here to discuss about the uh, price level accounting, price level changes accounting. Firstly, we will here to discuss about the meaning of price level changes accounting, which is also known as inflation accounting. And thereafter, we will majorly focus on need to study the inflation accounting, right? So, firstly, let us start with the meaning of the inflation accounting first of all. Inflation accounting, as you're looking in the PDF, is just about a process of adjusting your financial statement to reflect the effect of changes in the general price level. Whatever the changes in the general price level, especially it would be increase in the general price level. How you show the effect of these type of inflation in your accounting, how you show the impact of increasing in the prices in your financial statement accurately. This type of accounting is known as inflation accounting. In simpler terms, inflation accounting is just about ensuring the financial figures accurately to reflect the impact of inflation. So this is just a inflation accounting. Now, what is the need of inflation accounting? What is the need of inflation accounting? The very first requirement to understand about the inflation accounting is comparability. It is comparability. Ensuring the consistency in your financial data across the different periods help you to get meaningful analysis and decision making. Firstly, imagine that you are comparing your financial data from the different two periods without inflation. Without inflation. Without inflation, you can't show. Without inflation, it is very difficult to show your financial figures accurately to your investors or your stakeholders. It is just you can say that, for an example, it is just comparing the apple with the mango. What it means, sir? It means you can say that if you are comparing your different types of data, two different periods of data without inflation, then it is just a weak. So by adjusting the price level changes, we just ensuring that consistency in your financial data, or it also help you to get it also help you to get making to get making analysis and as well as decision making in your business. So inflation accounting is just helping you to get decisions also by comparing the data for two different period with the adjustment of inflation, or with the adjustment of financial statement with the impact of inflation. This is the first point. Second main reason for understanding the inflation accounting is true economic substance. It means reflecting the actual value of the assets and liability in the light of inflation that preserve the accuracy of the financial statement. In simple term, you can say that inflation can distort the value of assets and liability recorded in your financial statements. And price level changes accounting help us to reflect the actual economic substance of these items by adjusting them to their current value, which help you to get accuracy in your financial statements, and it overall satisfy your investors and also helps in making the decisions very easily. So this is a second requirement to understand about the inflation accounting. Now, the another need to understand about the inflation accounting is fair presentation. When the financial reporting doesn't account for the inflation, it can lead to the distortions, or you can say that making the company's financial health appear better or worse than actually it is. Without inflation, your accounts is just a worse that it's showing. Okay, so it means to say that price level changes, when you consider in your financial statement, it ensures the fair presentation. It ensures about the fair presentations very accurately, that makes the financial statement to better and showing the financial statement in a very good manner to the stakeholders. So it also helps the stakeholder to understand your financial statement very easily and take decisions as well. This is a third requirement to understand about the inflation accounting. Now coming for the fourth requirement, that is informed decision making. That is informed decision making. Price level changes accounting provide the stakeholder with the reliable information for assessing the performance and making the investments or lending decisions. In simple terms, you can say that investors and creditors always rely on the financial statement to assess about the company's performance and make the decisions. And price level changes accounting provides the stakeholder a reliable information with the effect of inflation in your account, in your financial statements. And these type of financial statement help in getting accurate decision making to the investors. So hence you can say that the, the investors got very satisfied with this type of accounting. Okay. The other need of the financial statement is called regulatory compliances, because the legal standards require the need of inflation accounting. In simple term, you can say that many accounting standards or regulations require the adjustment of inflation in your financial statement. Without inflation, you can say that it is just a uh, it is it is just, you can say that, not following your standards, not following your accounting standards, or not following your regulations that are required to make the accounting better. So many accounting standard and regulations require the adjustment of inflation, and you have to be adhering these type of regulations to ensuring that companies to ensuring that companies are companies showing their correct position. Companies the financial statement are showing their true and fair view. So this is a very important part. Without true and fair view, investors are not satisfied with your financial statement. To showing the financial statement in a true and fair manner, it should have to be fulfill the regulatory compliances. It should have to fulfilling the accounting standards. So this is another requirement which is fulfilled only with the help of inflation accounting. Now the another need is mitigating the inflation effect. Mitigating the inflation effect. Inflation erode the purchasing power of the money over the time. By adjusting the financial statement to the price level changes, we counteract the effect of inflation. And it helps to ensuring that the financial statements remain relevant, and even the effect of inflation is here, your financial statement got better results. Okay, so this is another requirement why we need a inflation accounting. And the second last need is in enhancing the transparency is just about disclosing every type of important things that are required for the stakeholder to take the decisions in your financial statement. So transparency is the key to the financial reporting, and we have to be make transparency in your financial statements. Price level changes accounting increases the transparency by disclosing the impact of inflation in your financial results. So it automatically provides the stakeholders with a clear understanding about the company's financial standing and make the informed decisions. So you can say that inflation accounting also promote the need of transparency, or also enhance the transparencies in your financial statement and got better results for their stakeholders. The last need to understand about the inflation accounting is investors' confidence. Why? Ultimately, you can say that price level changes accounting build the trust and confidence among the investors as well as in the creditors. By presenting a clear picture of the company's financial position, it enhances the investors' confidence and strengthen the relationship with the stakeholder of the companies. So this is another need why we study the inflation accounting, because inflation accounting overall build the trust and confidence among the investors and make a better relationship of the company with their stakeholders. So it also help the companies to achieve their goals very quickly. Okay, so these all are the requirements or the need that is very important to be studied for the inflation accounting. So in conclusion, or in a nutshell, you can say that price level changes accounting is just essential for maintaining the accuracy, transparency, and relevance for the financial reporting. And by understanding and implementing these type of adjustments, businessmen can provide the stakeholder with reliable information, and they need to be make the informed decisions. So this is all about for today. Thank you for joining us today. Don't forget to like, share, and subscribe for more informative content about like this video. So thank you so much. Have a very nice day.